Ladies and gentlemen, good day and welcome to Patel Engineering Limited Q4 and FY22 earnings conference call hosted by Kiran Advisors. Participants, please note this conference call will be for the duration of 45 minutes only. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vasubal Shah from Kiran Advisors. Thank you, and over to you, Mr. Shah.
Whole-time Director and CFO of the company, Mr. Rahul Agarwal, Head Strategy and Finance, Mr. Aditya Bajaj, Investor Relations and Marketing. Now I hand over to Mr. Rahul for the giving brief about the company. Mr. Rahul, over to you, sir.
Thank you, Vasubal. Good evening, ladies and gentlemen. A very warm welcome to you all in this earnings call of Patel Engineering Limited to discuss brief details about the company and the financial results for the quarter and year ended March 31, 2022. Patel Engineering Limited is a 73-year-old company established in the year 1949 and have a strong presence in hydroelectric and tunneling projects. The company has a consistent track record in execution of projects both in domestic and international arena. It is the only company in India to have completed over 85 dams, 40 hydroelectric projects, and more than 300 kilometers of tunneling with presence in more than 16 states in India and also Nepal. Since inception, it has been involved with the generation of over 12,000 megawatts, that is almost 25% of India's installed hydropower capacity, and has irrigated over 5.5 lakh acres of land in India. It has also constructed over 1,200 kilometers of road. Our clients are mostly central and state government organizations, namely NHPC, SJVNL, HPPCL, IRCON, CVPCL, NIPCO, Tangenco, etc. Now I will request Mrs. Kavita Shirvaikar, our whole-time Director and CFO, to brief you about the performance of our company in FY22 and the future outlook.
Thank you, Rahul. Good evening, everybody. I would like to thank and welcome you all to this forum where I get the opportunity to discuss the performance of our company for FY22. I hope that you all had a chance to have a quick look at the numbers. With that, I would like to walk you through the key highlights for the quarter as well as the financial year ending March 31, 2022 and the journey of our company so far from survival to growth. The last financial year has been good for our company. After having a sluggish year FY21 due to the impact of COVID-19 pandemic, things have started to look positive in FY22 with increase in the order book and strong execution resulted growth in revenue for the year. On a consolidated basis, revenue from operations for FY22 stood at INR 3380.3 crores. It is up by 69.5% from INR 1994.8 crore in the previous year. On a standalone basis, revenue for the year stood at INR 3027.8 crores, up 76.1% from INR 1719.1 crore in FY21. On a consolidated basis, operating EBITDA for FY22 stood at 527.7 crore, which is 15.6%, and net profit at 54.75 crore as compared to a loss of 298.2 crore in the previous year. On a standalone basis, operating EBITDA for FY22 stood at 458 crore, which is 15.1%, and net profit at 53.34 crore as compared to a loss of INR 142.1 crore in FY21. The increase is mainly attributed to overall growth of the company in terms of order book and execution across all existing projects. Due to increase in the orders, our employee strength has also grown to 3924 employees from 1531 employees in the previous year. The company has been focusing on bidding for new projects which are self-sustaining. I am happy to inform everyone that our order book now stands at 15,011 crores as on March 31, 2022. During FY22, the company received orders of around 2,300 crores. Further, the company was L1 for approximately 2880 crores as on March 31, 2022, for which LOA has been received subsequently. Some of the major orders received by Patel Engineering in the last 2 years are Kiru HEP project in Jammu and Kashmir for INR 2240 crores. Subansari HEP project in Arunachal Pradesh for INR 1564 crores. Luri HEP project in Himachal Pradesh INR 976 crores. Sista HEP project in Sikkim for INR 1251 crores. The company's focus continues to be in its core competency areas of hydropower and underground tunneling, apart from other segments like irrigation, urban infrastructure, and roads. Around 61.5% of our order book comprises of hydropower projects, 17.5% irrigation projects, and 11.2% tunnel projects, and rest from roads, urban infrastructure is others. The sector-wise revenue breakup on a consolidated basis is from hydro it is 38.5%, from tunnel sector 24.2%, roads 14.3%, irrigation 6.3%, urban infrastructure and others 16.7%. I would like to highlight some of the key achievements in terms of execution at our project sites in the last 1 year. We achieved fastest boring and maximum record progress of 653 meters in 1 month in the 3-point diet PBM segment in our AMT2 project located in Mumbai. In the J&K zone, a breakthrough of 8 meters diet tunnel was achieved at our T15 site with a drill and blast method. There was a record achievement of 775-meter record arch lining progress in a single month at our T2 project site in J&K. So I proudly say that we have a dedicated and energetic team on board. They are working hard towards taking the company to new heights. Now coming to overall debt position. The company has successfully managed to reduce its debt over the last few years to current level of around 2,000 crore on a standalone basis, mainly by monetizing non-core assets, being real estate and arbitration awards and claims. The debt equity ratio over the years has decreased considerably from a peak level of 2.8 in FY16 to around 0.38 level currently. Let's discuss about the infrastructure industry outlook. The government has increased impetus to develop infrastructure in the country, which is attracting both domestic and international players. As per the NIT Pipeline 20925, energy sector projects accounted for the highest share out of the total expected capital expenditure of 111 lakh crore. Hydropower is vital as peaking power and for grid balancing stability, given India's commitment under the Paris Agreement. 40% of total cumulative electric power capacity from non-fossil fuel sources by 2030. Hence, support to EPC and infrastructure players, especially in construction of hydropower and irrigation projects, are of immense importance and part of PM's vision to make India Atmanirbhar, which is not possible without a good infrastructure in place. Since independence in India, there are only a very few players in specialized construction of hydro projects. I am proud to say Patel Engineering is one of them. Now speaking about the future prospects of the company. The new orders received in FY22 and L1 converted into shall give a good boost to overall growth of the company, hence improve our profitability. Our focus is to build strong order book by selectively taking projects which are self-sustaining with reasonably good margins. We expect our order book to increase beyond 20,000 crore at the end of this year. Another goal for the company is to further reduce the debt burden. We have managed to reduce the total debt by more than rupees 3,500 crore in last 4-5 years. We are planning to further reduce debt by around 600 to 700 crores over next 2 to 3 years by monetizing our real estate and other non-core assets. With regular order inflows and focus on reduction of debt, we shall be able to achieve substantial growth in the future and strengthen our financial position. We are also in the process of merging some of our subsidiaries with Patel Engineering Limited, which will help reduce costs and ensure that the company gets synergies of operations throughout the group. That was a small brief from our side. Now I will like to Vastupal to take over Our team here shall be happy to give replies to any questions which you all may have. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. Ladies and gentlemen, you may press star and one to ask a question. Anyone who wishes to ask a question may press star and one. The first question is from the line of Yashwanti Khedekar, individual investor. Please go ahead.
Yeah, congratulations for a good set of numbers. You had already explained about the debt. I also just wanted to understand that our civil construction work, which we had seen for this quarter 4 and even for the full year, we had seen there is almost 40 to 45% jump in we had seen in the civil construction business. But if you see the profit, it has increased almost 5 times from 19 crores to 81 crores. So can you just explain what has happened to give such a remarkable increase in the profit?
Yashwanti, so our profits have increased in line of revenues because we have an EBITDA margin of around 15%. So as and when our revenues will increase, the fixed costs will not increase and the interest costs also remains the same, and it will add to our bottom line.
Yeah, sir, but almost when the revenue has the EBITDA margin is around 15%, but if you see the jump over the profit, it is almost 5 times, from 19 crores to 80 crores. So is it something like we had some good margin business which has come into the business line of our account, or you have a new billing which has been able to help you getting some good margin like this?
So, see, our product mix, basically the order book mix, which has now been increasing, coming from hydropower and tunneling, which now accounts for almost 65 to 70% of our total order book. So, which is helping us to get more margins. If you see in the past, our margins last year was around 9-10% on EBITDA basis, which is now 15%. So that 5% increase in the margins is helping us getting more profits, and which is a sustainable margin going forward also, because our major thrust is always on hydropower and tunneling.
Okay. Sir, and just wanted to understand what is our working capital cycle?
So a normal working capital cycle is around 5 to 6 months.
5 to 6 months, that's right. Is it because of the revenue to be recovered from the government?
Sorry, come again?
No, is that so high of around 5 to 6 months? Is it because we have to recover the revenue from the government? Most of our projects are from the government?
Yes, all the projects are from government, but because we are into business where the project life cycle is 4 to 5 years, so the initial expenses what we have to do for site mobilization and the billings what we do, so there is always this working capital cycle of 5 to 6 months.
Okay. And so we also take any subcontracting job work, or we take the direct one?
No, we take directly only from central government and state government PSU.
Okay. Sir, and in your last year's financials, I was just going through the numbers, and then I was just seeing there was a huge, contingent liability. So just wanted to understand what it is.
So contingent liability is mostly for bank guarantees, because we have to give bank guarantees for the performance of the projects. So yes, so that form part of the majority of our contingent liabilities.
Okay, sir. And I might have missed this in case if you had explained. We have a current order book of around 15,000. So that is over the period of?
So we have a current order book of 15,000 plus L1 converted to orders subsequently. So almost it touches around 18,000. Yeah, which is executable over a period of next 4 to 5 years.
Okay. Okay. Thank you so much, and we wish you all the best for your future.
Thank you. The next question is from the line of Rajesh Gupta from SBI Capital Markets. Please go ahead.
Yeah, thanks for the opportunity, sir. A couple of questions, sir. One is with regards to your debt. I mean, if I look at your current FY22 number, then your debt to equity is close to 1:1. Of course, you have done a good job to maintain it, your debt to equity ratio. But how you look to reduce it going forward?
So, Mr. Rajesh, we have been reducing our debt year on year, and we have good amount of land bank and arbitration awards, which is there. So this will help us to monetize and reduce our debt going forward. We expect to reduce our debt by around 700 crores in the next 2 to 3 years.
Okay. And sir, your order book is 15,000 crore rupees, which is 5 times of FY22 revenue. Are you facing any execution challenges? I mean, with this kind of order book with the 15 plus kind of margin, I think you can be, a fantastic company to look at. So, are we facing any execution challenge at this point of time?
No, we are not facing execution challenges at this point of time. Last year, like FY21, because of COVID, there were issues, but then this year has been good. I mean, all across all projects.
And if you see, our employee side will also increase, doubled in last 1 year, from 1,500 to around 4,000 employees.
Okay. And what kind of margin you will be having on these orders? Of course, you have L1 also 3,000 crore rupees. So, what kind of margin you anticipate in this order backlog?
We expect continue to maintain EBITDA level of around 15-16% from this new order book.
Okay. And sir, I have not seen you've been rated since 2015 or so. Can you please give us your rating profile at this point of time?
Yes. We are rated as BBB minus right now.
Minus triple?
BBB minus stable outlook.
Okay. And is there any near-term outlook for any kinds of rating revision?
So, post this March results, we expect to get back to the rating agencies and request them for a review.
Okay. And sir, within your entire area of operation, which sector is growing faster? I mean, just wanted to understand your hydro irrigation, because things are looking really great for the Indian infrastructure sector, looking at the spending from the government. So which area is growing faster?
See, in terms of growing faster, infrastructure, all areas are growing, but our focus is on hydro, tunneling and all, because going forward, if India has to get to a net zero for, carbon rating and all, then a non-fossil electricity and roads in hilly areas, which involve tunneling requirements. So that is where again we are focused on. So all these areas are currently focus of the government.
Okay. And sir, my last question is with regards to your promoter pledge. So currently you're holding 55% stake at this point of time, but you also have around nearly 100% pledge. So what is the management plan here to reduce pledge, or if you can share some outlook on that?
So management had pledged the shares to introduce funds in the company in the past when required by the company.
Mm-hmm.
And now going forward, as and when the company improves, the management will try to reduce the pledge holdings on that.
Okay. Any plan for the company to issue shares on a preferential basis to the promoter in the future?
Not yet thought of, but we can look at going forward.
Okay. Thank you, sir. Thank you so much.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Apurva Raj from APR Capital. Please go ahead.
Yeah. Congratulations for good set of numbers. My first question is, as you mentioned, for next year you have an order book around 15 to 18,000. So what would be the top line growth for next 2-3 years? Hello, am I audible?
Yeah, it is audible. So we expect, that our order book which is there to be executed over 4 to 5 years. So maybe 10 to 15%.
15 to 20% we expect.
Okay.
15 to 20% growth we expect.
15 to 20%.
Yeah.
So this year somewhere you are nearly about 3,000 crores. So can we expect next year somewhere around 3,100 crores somewhere?
Yeah.
And when you, as you are working on more of a project basis, so what kind of escalation clause you have in the projects when especially the commodity prices are going up and up?
So most of our projects has escalation clause built in. So it is linked to the index. So if the prices are going up, we are getting paid. Steel, material and labor escalation is included in our contract.
So more or less you are covered with all these fluctuations of commodity and other price increase.
Correct.
And that will be, give you a strength to maintain your margin somewhere around?
Yeah, current margin.
And what is your consolidated debt? As you mentioned, standalone somewhere around 2,000 crore.
Consolidated debt is around 2,200 crore.
Okay. And one thing, like government is announcing big projects. They are entering very aggressively in many areas. Are you finding any difficulty in getting receivables?
No, we are not finding difficulty in realizing receivables because government is focusing on the infrastructure and they are releasing payments also.
No, but is there any sign of improvement, or it is better than pre-COVID area, or little delayed compared to COVID area? How is this? Its scenario is improving or already improved?
It has improved and we expect to improve further.
See, if you see our working capital cycle also as compared to last year has substantially improved actually.
And this is because of government's efficiency?
Yeah, it is government efficiency because as and when bill gets certified, they release payment on priority because their focus is also early completion of the project. Now, if I would like to just tell you, see all the large projects which we have got recently, it is monitored by PMO.
Mm-hmm.
So payment also realization, we expect it is improving. Yes.
Okay. And little more, I wanted to know, madam, about as you mentioned in your last question about net zero something. So in which area which can help you going net zero, your company is working?
No, so see, we are mostly into development of hydropower projects, which will help the country to generate renewable energy.
Mm-hmm.
Power generated from renewable energy rather than non-renewable energy will help us going towards net zero plan.
And in renewable specifically?
Specifically hydropower.
Hydropower only. So not entering into any EPC of solar or other kind of project.
At present, our focus is on hydro. We may look into that expansion plan. Yeah.
Okay. I think that's all from my side. Thank you very much.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Sanjay from Envision Capital. Please go ahead.
Yeah, thank you for giving me this opportunity. Am I audible?
Yeah. Your voice is coming a little low. Yes.
Yeah. So, ma'am, I just wanted to know that the EBITDA margin which you guided for 15 to 16%. So, will we be able to maintain this Because I think that 18,000 crore, which the order book you mentioned, is to be executed in the next 4 to 5 years, and you have all the escalation clauses also mentioned in this the fund. I mean the contracts and all. But will this margin be sustainable? I mean, because in the previous years, I think the margins were low in the 9 to 10ish sides of the numbers. So what do you think on this?
Yes, margin is sustainable because right now, whatever new projects, as I mentioned, there are very few players. So whatever new contracts we have got with a good margin. So this margin is sustainable.
Okay. And what is the amount of projects we can expect in the next 1 year or so?
See, current year we already converted L1 2880 crore in LOA. Another we expect to 3 to 4,000 crores. So at the year end, we expect our order book to cross 20,000 crores.
That is for the orders. I mean, I was asking for execution, ma'am, in the near term.
Execution we expect with the current order book and further increase in the order book in future, we expect around 15 to 20% growth in revenue.
Okay.
As compared to last year.
Okay. That's all from my side. Thank you and good luck.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Mukesh Modi from Modi FinCap. Please go ahead.
Hi, good evening. I think most of my question is answered. Firstly, congratulations for the great set of numbers to the team of Patel Engineering. The only question which is left is what kind of debt reduction you are planning by, say, the end of 23? You guided 700 crore in 2 to 3 years.
See, we will push for reduction of debt as much as possible. So that's why we have given a plan of 2 to 3 years. So it all depends upon how fast we are able to monetize our non-core assets.
Okay. And one more thing about your this growth plan and EBITDA margin. What kind of headwind do you foresee, if at all it comes, then which can disturb these guidances?
Sorry, your voice
your voice is breaking.
On your this guidance of 15 to 20% growth and EBITDA of around 15%, which are the headwinds do you foresee which can disturb this kind of guidances? If you can highlight some of them.
See, we don't foresee as such, nobody can tell anything about any natural calamities or anything. But otherwise, we don't foresee any challenge in that.
Okay.
Given the current focus of the government of, focusing on infrastructure projects, releasing payments on time, we don't foresee any challenge in that.
Okay, so we are quite confident about going the growth.
Yeah, we are fairly confident to achieve this kind of growth.
Fine, that's great. That's great to know. Thank you very much and wish you all the best. Thanks.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of S.K. Goenka, individual investor. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yeah. So my question is on the total debt and related to that, the interest cost that we have in the balance sheet. So one question is that the total consolidated debt I heard is 2,200 crores. Is it net of cash on the books? Because I see about 200 plus crores of cash and bank balances. So is it net debt or is it?
Net of cash is around 2,000.
Okay. And now if I look at the interest cost that the company has, which is, I think, close to about 420 crores on a consolidated basis. So is it possible to give a breakup of that? Also, sorry, on the debt part, one more question was how much of that 2,000 crores is actually repayable debt, in the sense how much of that is working capital, how much of that is OCD, and how much are actually term loans?
So let me give you a breakup. So out of that 2,000 crores, around 1,300 crores is CC limits, which is not repayable, and 700 crores is repayable debt. That is the reason we were talking about reduction of 700 crores debt over the next 2-3 years. And as far as interest cost is concerned, so our interest cost consists of the total finance cost around 420 crores, which consists of 2-3 components. One is the interest cost payable to lenders on the debt, plus there will be bank guarantee charges and all for the NFB limits which we have. Also, there will be interest payable on advances from clients. So all combined, it comes to 420 crores.
Okay, because the way I see going forward, what is the average cost of funds bank borrowing that you have, and what is the likeliness of an improvement in that, because that can give significant improvement.
Yes, average cost of debt is around 11.5% right now.
And with the improvement in rating going forward,
Yeah.
we expect to reduce by 1 or 2%.
Yeah.
Okay. Thanks. The question was regarding, the learning of the past. So Patel at one point in time was absolutely phenomenal company, and I think in line with what the industry saw, Patel also had its share of problems, and fortunately we are on the good track now. So what are the learnings from the past, and the issues that we faced? How are we ensuring that nothing of that sort impacts the company from a sustainability point of view, sustainability of these profits and future?
Yeah, sure. So see, basically, we have learned from the past, and we are focusing only on our core business, which is EPC business. We are earlier forayed into other asset ownership businesses, which we are not looking into now. So that is one thing. And the other thing is, we are taking projects on a selective basis only, which are self-sustaining, so that the projects are funded through client advances, and we don't need to take additional working capital borrowings, which will, not affect our liquidity cash flows.
Okay. That's really useful. I guess the cost of funds seems to be still very.
Yeah.
I lost your audio.
Recovering company, our cost of funds are around 11.5%. And when rating further improves going forward, those costs of funds should come down.
Yeah, the only thing is that we are in a rising interest rate scenario, so I'm not sure if how much of would that translate into actual benefit, and that seems to be a bit of a challenge.
No, it is linked to the rating, company rating also. So going forward with our numbers and estimates, we expect rating to improve further, and then accordingly we expect to reduction in the interest cost.
And further reduction of debt going forward also will help.
Yeah, because we target to around 600-700 crores in next 2 to 3 years. So that will also help in reduction of interest cost.
Yeah, got it. Just one last clarification question. I heard that that about 15 to 20%, and on a consolidated basis, the turnover. So.
Yeah. Hello?
Mr. Goenka, can you hear us?
Yeah, I can. Am I audible? Yeah, my question is that just one clarification question. 3,380 crores is the turnover for FY22, and we are talking about a 15 to 20% growth in this year. So that means a 15 to 20% growth on the figure of 3,380 crore turnover achieved this year, right?
Yeah, we were talking more on a standalone basis.
Okay. Got it. That's all. Thank you very much, and wish you all the very best.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Rushabh from RS Capital Service. Please go ahead.
Hello. Yeah, thank you for the opportunity. Just to understand, given most of our contracts are linked to government, and the government currently is in a tight fiscal situation. Do we expect a delay in payments going forward? Maybe apart from the usual 5-6 months, can it go to 7, 8 to 9 months? Any thoughts here?
Yeah, sorry. Most of our projects are with central PSU, like NHPC, SANL, NCPL, they all are central PSU, and AAA rated companies.
So we don't expect any delay in payments.
No, we do not expect any delay in payments.
Okay. And how are we strengthening our execution capabilities as compared to past? Have we had anything, or we are confident of achieving this, or anything from the customer side they're telling you to do something, or?
We are constantly improving our employee base as well as equipment base, and hence we are fairly confident of our execution capabilities.
If you see, our employee base has also increased from last year, double the size, and equipment size also. See, we have purchased a lot of equipment, so our main focus is the execution.
Okay. And what is the interest rate breakup on term loans versus working capital loan?
So as far as our interest cost is there, so we have 700 crores of working capital, 1,300 crores of working capital debt and 700 crores of term loan.
On those both separately?
700 crore term loan also includes 400 crore OCDs.
I'm asking the interest rate percentage on that term loan.
Yeah, so our term loan and working capital interest rates is around 11.5%.
That's on a blended basis, you're saying?
Right.
So do you have a separate breakup for that?
Separate breakup I don't have right now, but I can share it with you separately.
But the term loan will be higher or lower than the working capital?
Term loan and working capital are same.
Same. Achha, okay. Okay, thank you.
Thank you. The next question is from the line of Sanjay from Envision Capital. Please go ahead.
Yeah, thank you for this follow-up opportunity. I just wanted to know some things on exceptional items. I mean, what are these exceptional items? I see that in 2016 we had a negative 112 crores. Then in 18 we had 100 crores again, and then in 21 we had 220 odd crores again negative. So what is this exceptional items, if you can highlight this?
So in 2021, we had written off our investment in a project which is Dirang Hydroelectric project, where we had earlier got into asset ownership, and then we closed that project and we settled the lenders. So accordingly, the capital WIP of that project was written off. Because we have exited from all these asset ownership business companies.
Okay, so this even we see that this year we have 30 crores. So this was for that only?
No. So this year 30 crores what is there, this is in respect of impairment of certain loans and advances to our subsidiaries, where we had land parcels and we expect to sell those land parcels, and based on latest valuation reports, we have done an impairment.
Okay. And any future exceptional items like 100 or 200 odd crores we expect in the future in the coming years?
No.
Okay. So there is no specific figure to exceptional items. This can be. I mean, I see that there are some positive as well, but those will be for ownership projects which you mentioned, right? Okay. That's all from my end. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. As there are no further questions, I now hand the conference over to Mr. Mastapal Shah for closing comments.
Thanks everyone for joining the conference call of Patel Engineering Limited. If you have any further queries or follow-up questions, you can write us at mastapal@cleanadvisors.com. And once more, many thanks to management team and the participants for joining the call. Thank you.
Thank you.
Thank you all.
Thank you very much. On behalf of Kiran Advisors Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.